All right, welcome to the fourth day of this training. All right, so finally, we are going to be talking about online trading. I know this is a topic that many of you have been waiting to hear. Um, the reason I reserved this is because I wanted to start with the topics that do not require much risk or much commitment from your part in terms of finances. All right. So the other topics I've talked about, content creation, affiliate marketing, those ones do not really require much capital, right? Of course, you might need to pay for advertisements, you might need to buy data, get gadgets, but you can't compare those ones to what I'm about to teach you guys now. That is why I kind of reserved this one for later, right? I kind of reserved this for later so that when you must have learned the other ones, then you can learn this one, right? So the reason I kind of reserve this is because of the nature of online trading. That's the reason I kind of reserved it for now, right? So welcome to the fourth day of this training, right? This particular training might not be long, right? It might maybe just maximum 30 minutes, right? The reason is because I already have done previous trainings on trading, right? This channel that you are watching is dedicated mostly to online trading, right? So out of the about 250 videos there, so currently I have about 250 videos. I think 80% or 90% are all about online trading, right? So it's not going to be fair on my part to start explaining from scratch all over again when you can simply go through the videos that have already been made. All right. So what I'll just do here is a kind of um brush up. I'll just point the important facts. So that's what I'll be doing here. Just like a lecturer coming to, prepare you for exams, right? He's just telling you, okay, read this, read that, go through this, go through that. Then it's not like he's teaching, he's just brushing up the important parts, right? So that is what I'm basically going to be doing today. I'll just be talking about the most important things about trading, and then you can go and watch the video. So I would recommend that if you're new to trading, you want to experience it, you can go through the 2022. So on my channel, the 2022 boot camp, right? I had a Forex boot camp in 2022. I also had one in 2023. I think that the 2022 is the one that is from scratch, right? The 2022 covered everything from scratch, right? That's what 2022 did. It covered everything from scratch. While 2023 and 2024 were kind of advanced, right? So 2022 is where I did the ground lectures from what is Forex, what is trading, all those things. That was basically what I did in the 2022 boot camp. Right. So for 2023 and 2024, they are kind of advanced. So I would recommend that you go through the boot camp for 2022. It's actually my channel. Just go to the playlist. You will see there. So I don't know, I think it's about maybe 10 of 20, 12 videos, right? Just go to the playlist. You'll see everything about trading there, and it's free, right? Nobody's charging you to pay. It's free, right? So that is where you're getting the in-depth teachings for trading, right? But in this class, I'll be brushing off the important details which you can add to what you'll be going through in those videos, right? So that is it. So I can't go through everything from scratch because it will take me a lot of time to start repeating what I've said before, right? So let's go to the videos of 2022 to have a comprehensive teaching, right? So now let's talk about internet money. Today is the day 4. We're talking about online trading, talking about what's required, and then the types of trading analysis, right? Other things that has to do with technical analysis, charts, markups, market structure, institutional candles, order blocks, liquidity, all those things are all in the 2022 bootcamp. So once again, after this video, if you feel like you want to learn trading, right? If you feel that you want to learn it, then you can go through the playlist. All right. So now let's start with the first topic. What is online trading? Right. So now this is what it is. So this is a process of buying and selling financial instruments such as currencies, cryptocurrencies, stock, bonds, derivatives, and commodities through the internet. So it's actually a way you can make money from the internet online, right? You basically buy and sell on the financial market, right? So now what do I mean by buy and sell? Now, before we talk about that, now online trading allows establishment investors, those are the big guys, the JP Morgans, the Dangotes, the Tony Elemelu, those are the investors, And then the individuals, that is me and you that are not, in that investor class. When I mean investor, I mean people that are net worth up to 100 million naira, 200 million naira. Those are the investors who that can invest like 40 million, 50 million at once, right? If you cannot invest that much, then you're not an investor, you're just an individual, all right? So um, this online trading allows us to participate in the financial market through what we call a brokerage, right? A broker, some people call it broker, some people call it brokerage, but the real name is brokerage. Broker is just like the short form. So some people call it broker, right? They'll say broker, right? It's actually brokerage, right? So you can call it a broker or a brokerage, right? So a brokerage is basically a company that allows you to trade the financial instruments, right? They allow you to trade bonds, they like to trade currencies, they like to trade derivatives, all those things, right? So you can also trade what we call an exchange, right? You can also call an exchange. So either a brokerage or an exchange, right? A crypto exchange. You can trade on those platforms, right? So now let's look at the next thing. Let's look at the next thing. So online trading works like a local market. This is the whole concept of online trading, right? So it works like a local market where you make gain when you buy a product. Like, just follow me. So you make gain when you buy a product and the price goes up, allowing you to sell at a higher price than you bought. Let us have an analogy. This is what all trading is all about. Just summary. Assuming that maybe I want to trade, I want to trade gold. So I bought gold at what? This I bought gold at what? I bought gold um at $350, right? So this was the price of gold when I bought it. And now the price of gold goes up. It goes up to let's say $470. Now you see that I bought at 350 and the price went up to 470. Can you see that I have made a gain? And what is my gain? 470 minus 30. My gain here is what? $120, right? Right, assuming I bought just one gold. Now, if I bought two, like maybe I bought two at this price, maybe I bought two. So if I bought two, that would be what? Right? And then if the price goes up to 470, that means I'm going to make 120 times two. That's what? 240, right? So this is how it works, right? This is how it works. When you buy at a specific price, you want the price to go up. That's how you make your gain. And then if you sell, you want price to go down. So maybe you click a sell on gold now. You see me sold it at what? 500. And then the price goes down. The price goes down to what? Down to, let's say the price goes down to what? 400. So your profit on this is what? 100 because you sold, right? So now the reason why I reserve this for now is because when it comes to trading, you can take losses. So imagine you bought now, at 500 and it drops to 400. It's not you have made a loss because when you buy, you want the price to go up, while when you sell, you want the price to go down, right? So those are the two actions you can take into. You can either buy or you sell. So it's either you're buying or you're selling. So that is why I said something here. Read it. I said that it is so worthy to note that online trading carries a high level of risk and it is not suited for everyone, right? If you're not okay with losing money, you don't have money to lose, you don't have the patience to endure losses, you don't have, you cannot deal with your portfolio going up and down, you're up $1 today, down, if you cannot deal with all those things, please, it's best you avoid this particular part of this training, right? Like I said, it's not suited for everybody. Trading is not suited for everybody. I repeat again, trading is not suited for everybody. For people that like taking risk, right? Like me, I'm very risk adverse. I like to take risk. I've been a trader for 4 years now, right? And I'm still here, right? So this is what you should know. So trading is all about, it carries risk. That's why I kind of kept this one for now. It carries risk. If you don't have money to lose, if you don't have where to get money, if you lose it, if you don't have money, I don't have where to get. Just focus on affiliate marketing, focus on content creation, and focus on what? Freelancing. You can leave this part for us, right? So forex trading is best suited for people that like taking risk and people that want to multiply their money by a large, fraction, because in the trading space, there is no limit to how much you can make. This is one thing about forex market. There is no limit to how much you can make. That is why it is very risky. I have seen people that today they were worth $30, and by tomorrow they are worth what? They are worth $5,000 through what? Trading, right? So trading can take you from 0 to 100, like over, like just like that, in a matter of months, right? You can go from being very broke to being very rich, right? But of course, you can also go from being very rich to being very broke. So just to balance that thing, right? So it's not like you're going to get rich guaranteed. No, trading comes with a lot of risk involved in it. So that's why I don't always make it look so fancy. But I always tell people the truth that there's risk in trading. So if you want to do it, make up your mind to deal with whatever comes with it, right? So for me, I've been a trader for 4 years, right? 4 years is not a business, and I'm still here. I've gone through the hard times, the good times, and I can tell you that it is worth it. It is worth it if you can endure the hardship that comes with it, right? So let's go to the next thing about online trading. Now, okay. Now, what do you require as a trader? Number one, you need capital. Like I said earlier, online trading requires you have money in your brokerage account. Your brokerage is the company that allows you to trade all these things. For instance, now if I want to trade, assume I want to trade, maybe I want to trade gold, right? I'm not going to go and buy gold physically. I'm just trading the price of gold. Like, what is the price? I'm trading the price. I want it to go up, I'll buy and then to go up. Or let's assume maybe I want to trade Bitcoin, right? I want to trade Bitcoin. I'm not. Have you ever seen Bitcoin before? Please, if you have seen Bitcoin, just type yes. If you have not seen Bitcoin before, type no. Like you have seen it physically, right? If you have physically seen Bitcoin, just type yes, I've seen it physically. If you have not, type no in the comment section. So basically, these things are not physical, they are done online. And the most important thing is what the price of it. So we are trading the prices. If Bitcoin is at maybe $1 and it wants to go to $2, you buy. If you want to drop, you sell. So that is basically what you're doing. You're predicting the movement of the price of Bitcoin. Is it going to go up? Is it going to go down? What is the price of Bitcoin? That is basically what you're doing as a trader, right? So of course you need capital for that. You need money. You cannot trade and be broke. You cannot be trading when you don't have money you can afford to lose, right? Maybe all you have is your school fees, all you have is your house rent. It's not suitable for you, right? It's best you go and start with freelancing, and then when you now have money, like most traders I know, like like most traders I know, like one guy I love him so much because of how his story inspires me. This guy, his name is Jack Precious, right? I watched his story. He's actually a crypto trader. He's a very very inspiring person. Inspired me a lot, right? So this guy, he started with what? Started with affiliate marketing. This is what he started with, affiliate marketing. And then when he made so much money with affiliate marketing, what did he do? He moved his money to what? Crypto trading, right? He went into what? Crypto trading. This is what he did. And he now used it to what? Multiply his money. Now, imagine that he started with just online trading, just like that. No money anywhere. How would he have succeeded? So he succeeded as a trader because he had affiliate marketing to do what? To give him what? The capital to trade, right? So it's essential that you have something that gives you capital. That's why I kind of started with other things. That's why I was very wise. I started with what? Content creation. I started with affiliate marketing. I started with what? Freelancing. Things that you can do without having much capital. And then when you now start succeeding in it, you can now move over to trading. But if you already have the money, you have the capital, then you can just simply move over to trading. So it's not for someone that is broke. If you're broke, you're a student, you don't have money, just stay away from trading, right? Just focus on other things, right? It's not a poor man's business. All right. So let's go to the next thing. Trading is not a poor man's business. All right. So let's go to the next thing. All right. So now another thing you need on trading is what you need to get knowledge and experience on how to trade, right? Like I said, you can get free classes on YouTube, but it's always best that you pay to learn from someone directly. When you pay to learn directly from someone, you get direct guidance, which you will likely not get on YouTube, right? And of course, I have a private class on this. If you want a private class on how to trade, I always have a class on that, and it's not free, right? So, like I said, trading is something that needs time. It's something you need to learn properly. And when you or just watching trading videos on YouTube. You can learn affiliate marketing on YouTube. You can learn freelancing on YouTube. You can learn all those things on YouTube. But I don't think that trading is something you can learn properly on YouTube, because you need someone that you can ask questions. Now, for instance, now if you watch my bootcamp videos now, there are things you cannot come and ask me, because I am not obligated to reply those questions, right? Maybe I'm busy now, maybe I'm doing something now, and then somebody else come for me to ask me. Because I wouldn't answer that person, because that person is not in my let's say that person does not that person is not a recipient of my time, right? So I have a lot of things to do, right? So when someone says, okay, I want to learn from you directly, that person kind of gives you what, that commitment. Okay, I want to learn from you directly. Can you teach me how to do this thing? That is when you now become involved with that person, right? So that is why I encourage, if you want to learn how to trade, it's best that you pay and learn, because if you're watching YouTube videos, you can't ask the YouTube person questions. If something is confusing, you need small clarification. Okay, sir, please, can you clarify this? No one to ask. If something maybe you are having a setback and something is, no one can put you in the right direction. So when it comes to trading, you need direct guidance, like someone to teach you directly. Someone can answer your questions. Someone can, reach out to, please, sir, I'm having issues with this. Can you put me through? So I took a loss on this trade. Can you kind of help me to understand what I did wrong? Those kind of personal guidance. So what you really need to succeed as a trader. Like me, how I came to this level was by paying for classes. Someone taught me, right, how to do it right, right. So you need that direct guidance, and you can't get it for free on YouTube, right? So YouTube will just give you what foundation. So basically, if you're just starting, like I said, if you're just new, you can also start from what the 2022 bootcamp to get what the foundation. Just okay, you want to just understand the basic foundations of trading, right? And then you can also go to babypips.com, right, to get familiar with trading terms. So this is site you can go to too. It's very, very good. It teach you what the terms, kinds of brokers, what a spread is, what a lot size is, what a currency pair is, different kinds of all those things. It teaches you step by step. Babypips.com. So go to babypips.com and learn all those things from scratch. What is forex trading? Types of brokers, all those things. It kind of teaches you those things clearly, so you can have a best understanding of what all those things are, right? So I would recommend that you go through these two teachings. Number one, you go through was my mentorship for 2022 on YouTube, and then you go through bigpips.com to have what the foundational understanding. If you already have the understanding, just go to my mentorship. But if you don't have the mentorship videos on YouTube, so if you have gone through the baby pips, you cannot go through this. But if you haven't gone through baby pips, I suggest that you begin from babypips.com. If you're just new, like totally new, like you're brand new, like this is your first time about hearing trading, just start from what the baby pips. But if you're already familiar with trading terms, you know what a lot size is, you know what a pip is, what a session is, then you can start from what my 2022 free class. And of course, if you want to learn it properly, like I said, you need private classes on that. So you can learn, you can ask questions, you can have live classes, all those things. It helps you to get a better understanding. Up to today, I still have students that still asking questions every day. Now imagine that they were on YouTube. All those questions that they asked, I have some students that have asked me nothing less than 100 questions since they joined me. So now imagine that you were on YouTube. How were you going to, who was going to answer your 100 questions? Who was going to answer it? Is it the person on YouTube that will answer it? No. You need that direct access to ask someone questions directly, because to help you to grow faster, right? So let's go to the next thing, right? So look at this now. Of course, you need data and devices that you can connect to the internet. That's your phone, your laptop, your mobile phone, your gadgets. All those things are needed to succeed as a trader. You need a good phone, of course. You need a laptop, not compulsory, but you need one at some point, and all those things. And then you need a trusted brokerage, right? And of course, you can use 10 trade, right? I recommend 10 trade. You can use it as your brokerage. So I recommend 10 trade. It's also you can use the demo account. So you just sign up with 10 trade. So use the link in my description to sign up with 10 trade, right? Sign up with 10 trade. This is the broker that I would recommend for you guys. So use the link in the description to sign up. So use the link in the description to sign up for 10 trade. You can use the demo account to learn and practice. So you can start with demo account. Demo account, you're not risking any money, just like a real account, but it's demo. It's kind of virtual fund. It's not real money. Right, so you can start with demo accounts just to practice and understand certain things. And then you can now, if you, when you're now comfortable, you can now switch to live money. But I would recommend that you start from what? Demo. right? So let's go to the next one. Now, note again, trading carries a high level of risk as monetary loss is very likely. So you can lose money. It's very possible to lose money. That is why I always say it carries risk. Now, trading takes time to master, and I would say that it's 1 year minimum. Of course, a lot of people take longer than this. So, like I said, 1 year minimum, right, is very logical, right? If you want to master how to trade, I would say 1 year at least, because you need to learn. You have to experience the different market conditions. You have to experience the easy markets, the ranging markets, the consolidating markets, the trending market. You have to experience all of them, right? Imagine that you just start trading now. This is August, right? Now we're in a very tough market condition. Imagine you just trade for only 1 month. You're not going to understand how it is to trade in January or December. When December is when the market is always going one direction, it's very easy to trade in December, right? So there are times when the market is very easy to trade, at times it's difficult to trade. So you have to experience all those things. That is why I said it's like 1 year. Let's experience from January to December, know how the market looks like, all right? And then trading is best learned when you have other income sources at it allows you to learn with ease. Like I said, that is why I began with content creation, freelancing, or other things, so that you can have other things giving you money, so that you will not be under pressure to learn or under pressure to make money. Because when you're under pressure, you don't learn properly, right? When you're under pressure, like you want to pay your school fees, you're not going to learn properly. Those things will put you under pressure, right? So you need to have that something giving you money apart from trading, so at least you can have the cool mind to learn, right? And then I have a free class on my YouTube channel in case you want to take a look at what. So I have a free class on my YouTube channel. That is the boot camp I talked about, the 2022 boot camp. I talked about it, the 2022 boot camp, right? So 2022 boot camp is what I talked about, right? So the 2022 boot camp is what I talked about. You can have the boot camp and go through the free introductory class. If you're new to trading, just go to those classes. It's very important to go to, so you can understand what a spread is, understand what a loss is, all those things, those nitty gritty, those easy topics, so you can understand those things from there. So I also post a link to that in the group, so you guys can see the video directly, so you don't have to struggle and look for it, right? So it's free, right? So start from there, right? So let's look at another thing. So I have three kinds of analysis, right? So you have types of analysis. Like I told you guys, I said that I said something earlier. I said that you make money, right, when the market is going up or down in your favor. So now, how do you know when to buy or sell? This is the most important thing you want to know. How do I know when to buy or sell a market? How do I know this? And that is what brings us to what? The types of trading analysis. So this analysis will help you to know when to click a buy, when to sell. When should you take a buy? When should you buy good? Or when should you sell? Right? That is what you're doing in trading, either buying or you're selling. So now you can use technical analysis. So this is the use of the data and the volume from the past to predict the future of the market. So you're using the market's data. What did the market do in December last year? What did it do last month? What did it do in January? You're using those old data to predict the future. You'll be like, okay, based on what it did last year, it should do this year. That is what technical analysis is, just using the past to as predicts the future. And instead of focusing on only fundamental effects of financial instruments, technical analysis relies on charts and technical indicators to identify trends, patterns. Take note of this word pattern. So take note of this word pattern. Take note of this word pattern. Very important. This word here. Take note of the word pattern. Take note of this word trend. And take note of this word statistical. These are the three words you pay attention to. Now, let me explain that. You are looking at the past data. You're looking for something that is familiar. Is it something that looks alike? What is the trend? That is what we do in technical analysis. We look at the past data of the market to understand what the market should do in the future. That is what we call technical analysis. And the key concept here is what? We use charts, we use trends, we use support and resistance. You will learn that in the babypiece.com. We use indicators, we use volume analysis, and we use what? Pattern recognition. Technical analysis is most used by short-term traders to profit from short-term price movements. So, and of course, past performance is not always indicative of future results. That means technical analysis is not 100% guaranteed. So it is not 100% guaranteed. That's what we mean there. That is what we mean there. This word there, past performance is not always indicative of future results. It simply means that it's not 100% accurate. That means no matter what you see in the past, markets might choose to go a different route, right? But most times it repeats itself. The market can repeat based on what the patterns and trends that have shown from the past. So we use all these things which you will learn in the bootcamp videos to identify when we should buy or sell based on technical what analysis. Right? That is how we do it. So watch the video on the bootcamp videos. You get all the technical trainings you need. Right. So this is not to teach technical analysis all over again. So the second one is what fundamental analysis. And this one here is a method used to evaluate the value of a market. We use economic tools, we use financial factors, we use qualitative factors. This one is more of studying the economic parts of the market, right? So it is obviously the opposite of technical analysis because it focuses on um, what on interest rates, gross domestic. This GDP means gross domestic product. That is the country's growth or let's say financial strength. CPI means inflation and other economic. So in summary, fundamental analysis focuses on what economic factors. Let's say social. It focuses on socio-economic factors. This is what it focuses on, right? For instance, now we are having what an election in the US by November. That is what we call fundamental analysis. So that election can affect the markets. Or we have maybe we have an earthquake now. That is what a fundamental what effect. Or we have what a recession. It's what we call a fundamental what effect. Or we have what a strike, an oil well strike. They have maybe an oil refinery strike. These are all what we call these things can affect the economy. And that's why we call them fundamental. We don't use charts to know these ones. We use what is happening, earthquake, recession, interest rates, GDP, unemployment rate. All those things are what we call fundamental analysis. We use all these things to kind of identify what fundamental analysis should do. So fundamental analysis is something you can learn um, as time progresses. So you can learn the effect of interest rates, GDP, CPI. I kind of explained this in my pay class. My previous, I kind of told them how to use all these things, right? But for fundamental analysis is not really important if you like short-term trades, right? This is like I said. Look at the previous slide there. Look at the previous slide. Look at the previous slide there. I said that technical analysis is used by short-term traders for short-term price movements. That means in this one, you are focused on short trades, while in fundamental, you're focused on what long-term movement. So for fundamental analysis, it's more focused on what long-term effects, right? On the long term for the next 5 months, next 6 months, what should the market do? So that's what this one focuses on, long-term movements. Why technical focuses most times on what short-term movements, right? That is basically the difference, right? So if you like to invest for a long time, you want to be looking at fundamental analysis. But if you're always taking short trades like fast 1 day trade, 2 days trade, you can just focus on technical analysis with just a bit of fundamental. And then finally, we have what we call sentimental analysis. This one is used to it's just basically studying the behavior of other traders. So in this one, we are studying what the behavior of other traders. We want to know what are they thinking, what is their thought process. So we're studying the behavior of other traders. That was we do in sentimental analysis. What is the sentiment? How do they feel about the decision? Like now, we are having an election between Harris and Trump. How do people feel about the Democrats taking over, or the republic. So how do they feel? This is what we call sentimental analysis. How do people feel about this stuff, right? Like today now, today is 5th of August. We saw that the $1.2 billion was wiped away from was the crypto market. So now, as this money has been lost from the crypto market, are investors planning to buy more, or are they planning to sell? What are the investors thinking? How do they feel about this liquidation? How do they feel about it? So that's basically what this is all about. It's studying what people feel about this thing. But the challenge of this is that it is not very accurate, because you can't read somebody's mind, because a person's mood can change. And then time sensitivity. Okay, the person was feeling this way now. What about the next hour? Is he feeling the same way? Okay, I was afraid of doing this thing. In the next 10 minutes, will I still be afraid? So that's why it's not very accurate, because someone's sentiment can change at any time. So we use tools like we can monitor your social media accounts. We can use AI tools that kind of estimate how people are feeling about it. Like it kind of studies their behavior, how they're investing, and then it kind of tells you, okay, this is what this person is doing. For instance, now, if Elon Musk buys Bitcoin, it means that he's interested in Bitcoin. That is a sentimental analysis. So they say, okay, Elon Musk bought Bitcoin now. That means he's interested in that Bitcoin. That's sentimental analysis. But how long will he be interested in it? What is it? What if he's planning to sell it tomorrow? So that is why it's not very accurate, because the sentiment can change and it's not always accurate, right? That is one thing about it. So you should focus mostly on fundamental and technical. You cannot just add this just for additions, right? So that's basically how this one functions, right? Sentimental analysis, just studying people's behavior, right? Or reaction to particular events. And then in conclusion, I've talked about the three kinds of analysis. Let me just point this out. So one I should point out is that for technical analysis, right? Technical analysis is really of advantage when um, you want to take short-term trades, right? This is the advantage of this. You want to focus on short-term trades, right? And then it gives you a precise area to enter your trade. So a precise entry point. So where are you entering the trade? At what price will you enter? Are you going to enter the price when it's at 1,000, when it is at 900? So it gives you what? A precise entry and exit point. So this is why I like this. So technical gives you a precise entry and exit point, right? But of this is that um the flaw of this is that sometimes it can go against fundamental, and when it goes against fundamental, fundamental always wins. And when it goes against fundamental, fundamental wins technical analysis anytime, anywhere. So if maybe fundamental is bearish and technical is bullish, bullish simply means it's going to go up, while bearish means it's going to go down. So if fundamental thinks it's going to go up and technical thinks it's going to go down, technical is going to lose and fundamental is going to win, because fundamental is what's long term, while technical is what's short term. So that is the flaw. If fundamental always wins technical analysis, right? That is the flaw, right? And then another flaw is that um, it does not consider what it doesn't consider what long term moves. So this is always focused on short term trades, but doesn't really consider what the market doing on the long term, right? So you're kind of blind to very long term moves when you always focus on what technical analysis. Now for fundamental, I always focus on these two, right? So for fundamental, the advantage is that it gives you what a long term picture, so you can know, okay, this is how far the market should go. So it can help you if you like taking long term trades, can help you with that. And then it has more accurate reading. So if you're using fundamental, you'll be more accurate with your direction, right? You know, okay, market should drop. It has more accurate reading than technical, because technical can, they can change when fundamental is against. And then the disadvantage of this is that um it doesn't favor short-term trades. So it doesn't favor short-term trades, right? It does not favor short-term. If you want to take short trades, like fast in and out, it doesn't help with that. So this is a disadvantage or the flaw of this. It doesn't help with short-term trade. Number two is number one, sorry. So, and the number two is that it doesn't give you a precise entry. So it doesn't, you can't use fundamental to know exactly when to enter a trade. Okay, now if maybe there's an earthquake now and the market is supposed to go down, you don't know exactly when to go down, when to enter. Should I enter now? Should I wait some more? Sometimes you can enter in a fundamental trade and it will take 1 week before it will go your way. So it happens. Sometimes you can do your analysis on fundamental and then it's taking 1 full week before it's going to go your way. That is why it has a flaw. So the best approach is what? To combine it. So the best approach to what? Combining two of them is the best approach. So you now combine it so you can know, okay, this is the overall direction and to enter now. Since technical helps you to your precise entry, you can use that as an advantage and then combine it towards the fundamental direction. Since it's more accurate, since fundamental is more accurate, it will help you to be more what? Precise, and then you'll not be losing towards fundamental analysis. And also consider, so it's best to what? Combine. So the best was combining it. Just combine it. This is the best approach to use when you're trading. Combine technical and fundamental. So you'll not be on the losing end. And of course, you can also add sentimental too. So that's basically how this thing operates. So I hope this teaching made some sense. If you have a question, feel free to drop it in the comment section. Just drop your question if you wish, right? Drop it in the group or in the comment section. And if you want to join our paid class for trading, you can always send out a DM to me. If you want to learn privately how to trade properly, like from scratch, everything properly. Like you want to be held by the hand, you want to be taught personally, right? You want to join my community, then you can. But if you want to just go to the free class, right, you can go to the YouTube bootcamp just for intro. So I would recommend that if you're totally new, like a complete newbie, I don't recommend that you pay now. I recommend that you start from the free classes on what Baby Pips. Start on the free class on babypips.com and then start from the classes, the 2022 bootcamp I made. So the 2022 bootcamp, these are the two things I recommend. If you're just totally new, like this is the first time you're learning about trading, start from the 2022 bootcamp and then don't come and pay you. Start from 2022 bootcamp and then babypiece.com so you have an understanding of what you're going to do if you want to continue, because some people actually give up on the way. Some people can say, no, I don't want to be a trader, I'm not cut out for it. And that is fine because it's very risky, right? So that is basically it. So if you want to learn more, you can reach out to me. If you have a question, drop it, and then tomorrow we'll end this 5 days training. So have a wonderful day. Cheers.